Hello everybody, welcome back to episode 15 of my weekly investing journey. This week was straight fire. My portfolio finally flipped into the green. You know, it's nice when on a week you can finally, begin to see the light at the end of the tunnel. However, I am not yet convinced that the existing volatile due to the conflict in the Middle East is anywhere close to an end. Therefore, I'm going to enjoy being on the week this week, preparing myself that maybe next week we're going to be back in the red, In this week, every single holding made money, and I got another nice distribution payout. However, we're going to enjoy this week while expecting the wars for next week, okay? During today's episode, we're going to go back over the usual, the deposit. We're going to go back over my new buys. We're going to go back over the distribution, stock performance, and why the Iran ceasefire created such a perfect setup for my strategy, all right? Let's dive in. Well, the first thing we're going to see is that obviously, I did say we were in the green. You can take a look on the back into my Well Simply account. We are up 1.61% this year. Compared to I think we were down minus 3.0 something last week, which we'll go into it in a couple of minutes. It's very satisfying, very, very satisfying. In terms of the, contribution, first things first, because discipline pays, I deposited my regular $75 weekly contribution. As I say, rain or shine, it just goes in, right? For as long as I can keep it at 75, that's what I'm going to be doing. Hopefully, sometime January next year, we can bring it up to 100. On the income side, I received $33.38. That includes the full monthly payout for the ETF that pay on a monthly basis at the beginning of the month, and also the first bi-weekly payment from some of the ETFs that pay twice a month, right? Actually, I'm beginning to see how compounding is really starting to feel real. In terms of buys and sells, well, I didn't sell anything this week. I'm pretty happy with my current setup. I have to say, though, there are a couple of new ETFs that have been released. There's a new one by Brontom that also pays bi-weekly. I think it's the first ETF by Brontom they have that it pays bi-weekly, which look really good. However, it came out at a $25 price, which, it kind of puts it out of range for me at the moment. If I were to add a new position, I will have to see what I could remove. It does pay 20 cents, but I don't know. I've put it on my watch list to see if there's anything I can do. Maybe I can, maybe I can swap it for something else. I don't know, but I'm pretty happy with my portfolio right now. So I'm not in any hurry to make any movements. In terms of what I bought this week, well, I bought HIS, I bought SDate, I bought CANI, HDIV, HHIC, and HPYE. All of these buys are consistent with my cover call enhanced yield and sector rotation strategy. I'm just slowly building positions across the boards, right? Instead of buying many of just one, I'd rather buy one of many. Okay. In terms of the performance, like I mentioned earlier, last week we were at minus 3.07% year to date. This week, I'm happy to report that we are up 1.61% year to date. That's a change of 4.68% in 1 week, which is, it's pretty amazing. There's not really much more I can say. The number speaks by themselves. So, again, mindful that the volatility will stay there, and that as much as we went up this week, we could go back down next week, okay? Let's keep it realistic. In terms of the, my assets, the ones that did pretty well versus the one that didn't do pretty well, even though they still did okay. Obviously, we have Broadcom, AVGY, which went up a whopping 17.3% last week. It's only 2% of my portfolio, right? Because I I don't like to overexpose myself on single stock ETFs. But, you know, it's like, it did amazingly. The runner-up was AMD with 11.74%. And, you know, I think half of the portfolio went up by 5% or more. And the other half when, you know, it was between 0 and 5%. The one that didn't do very well is HHIC, which only went up, you know, a measly 0.14%. But, you know, there is a reason for that. The ceasefire caused oil prices to pull back sharply, and that weighed on Canadian energy names. And I'm sure if you don't know, but if you know, HHIC has a big exposure to energy, right? But it's still, you know, still positive, and that is what really matters. In terms of the weekly ranking, as you can see, well, you know, green everywhere. We have Broadcom 17%, AMD 11%, Copper up 7%, Q-Day 6%, Gold 4%, the banks 4%, US 4%, HP, more banks 3%. It's funny how 60 went up 4.29% because it has a higher leverage than HPYB, which only went up, you would say, for 3.5%. You know, and then we have others like, you know, silver went up 5%, etc., etc., etc. Great week. So in terms of the, you know, what drove this exceptional week, well, obviously there's just one big macro event, right? The Iran ceasefire. You know, the tech-levered names led the charge. You know, risk appetite came back. The banks held strong. Even precious metal like silver, gold, and copper had a very solid run, right? Energy, as I mentioned before, was the only area that got a bit of a hangover from falling oil prices. But, you know, if something goes up, something's going to go down. You can't have it both ways, right? But this is exactly why I like a diversified, enhanced yield portfolio, because when the macro setup aligns, multiple sleeves can win at once, right? And that really it's very important. So this is it for this week. You know, another week of progress. We're chipping away at the year-to-date number, and the income is compounding nicely. If you're enjoying the journey, please smash the like button, subscribe. We're trying to reach 100 subscribers by the end of the year, and drop a comment. You know, what do you think about the ceasefire impact on these sectors? Are there any tickers that you want me to explain more next week? Anyways, thank you so much. See you all next week for episode 16. Let's keep stacking. Take care. Bye-bye now.